this exclusive interview, first only on NDTV Profit, with Arvind Panagariya, since he has become the chairperson of the 16th Finance Commission. Now, of course, Mr. Panagariya was the first VC of the Niti Aayog, a Columbia professor of economy, and now will be handling this very, very important task as head of the Finance Commission. His report of the Commission will be due in the next 2 years. Mr. Panagariya, thank you so much for speaking with us here on NDTV Profit. Absolute pleasure to speak with you in this avatar, I must say. And the first question hence is, how is it being back in Delhi after a fairly longish stint in Colombia?
Yes, indeed. Really glad to be back. Working again on India from New Delhi. So I'm very pleased to be here.
Yeah. So
and good to be with you on NDTV. Now you have moved.
Absolutely, absolutely. So new innings, and both of us having this conversation in this avatar, for the first time. So I know there are limitations to what you can say about your work as chairman of the Finance Commission. I understand that, but you have been a keen watcher of the Indian economy throughout the last several years. So, which is why, let me begin with that, where we are right now. Now, our last quarter GDP numbers at 8.4% was shock and awe, honestly. It was more than what anyone expected. In fact, there was some commentary saying that the numbers don't really match up. One of them coming in from a former economic advisor. Let's start with your views on where the Indian economy is going and the latest GDP data.
Yeah, look, if you follow what I have been saying, I'm not surprised. I've always been saying that, we'll be growing 7 to 8%. And I was actually also saying that everybody else is being too pessimistic about the Indian economy. So it doesn't surprise me. As regards the skeptics who say, oh, there is some problem with the numbers and all, I think it's all a bunch of nonsense. Maybe some corrections will happen. We'll find out as we go, because these numbers do get revised routinely by MOSPI. But if to me, manufacturing has done well. Now, remember all these skeptics. Previously they said, oh, electricity consumption numbers don't match. Well, electricity consumption is quite high. Growth in electricity consumption has been quite high during this period. If you look at the numbers, manufacturing has also done, decent, 8% or so, 8.5. And it is across the board. It's not like this growth is actually coming out of one single sector. It's largely in most sectors growth has been good. Only agriculture actually is the one where growth for the year as a whole. I'm talking not just the third quarter now, but for the year as a whole, the 23-24 fiscal year. But other than agriculture, it is across the board. You got mining, quarrying going 8.1%, manufacturing 8.5%, then electricity, gas, water supply, etc., 7.5%, construction 10.7%. So it is across the board. So I find it quite credible. But we'll see, if how far do they get revised as we go eventually, and what is the final number that comes.
So, even as you talk of skeptics, I think the biggest question then which is being raised is about the rate of private consumption. So for the year, we're expected to close at north of 7.2% for the last financial year. But your private consumption is still at about 4.4%. And that is the concern. An economy which has traditionally been driven by private consumption, you're seeing that perhaps come off. Rural consumption is not where it should be ideally. Is this something you're worried about at all?
Look, let's first look at the aggregates. I mean, at the end of the day, some numbers may not rise as fast as the others. You can always pick on the ones that did not rise as fast as the GDP. In this case, it happens to be private consumption. But what about the investment? To me, the most important figure, if you're going to look at this, consumption, investment, and government spending and net exports of the four, most important to me is the investment. And gross fixed investment to GDP ratio is now 34.1%. And it has climbed up steadily. Actually, if you go pre-COVID and onwards, during COVID, it fell. It fallen somewhere between 28-29%. It's now back up to 34.1%. So if investment is robust, naturally in the end, all these percentages have to add up to 100. So when investment proportion rises to 34.1%, something in out of those four components will fall in the share. It's pure arithmetics. And so in this case, it's private consumption. So fine, that's what has seen the declining share. But that does not undermine the fact that overall aggregate demand has been robust, and that has actually helped pull the growth rate to 7.6%. Now, will private consumption stay tepid? I don't think so. In an economy that's rising at 7.6% or anywhere between 7 and 8%, we will see the turnaround in private consumption as well.
So you're saying the turnaround in private consumption will come about. I'm asking you about all of the questions or the question marks right now on the Indian economy, Mr. Panagariya, because the overall narrative, mood and momentum is very, very positive. So if I ask you, is the Indian economy doing well, you'll say absolutely, which everyone says it is, which is why I'm going to come to you on the questions that people have. And one of them is on unemployment. Now, the latest government data, the periodic labor force survey, says that employment has come off from 3.6% the year before, 2022, to 3.1% in 2023. Do you think that that's a sufficient answer to those who say that India still has an unemployment issue? We're going into poll season and unemployment is becoming at least a big political issue. I want to understand your sense of how big a concern it is in the Indian context.
Yeah, so Tamanna, my view on unemployment has always been that unemployment is not India's problem. It is underemployment, which is meaning low productivity. Generally, if you look at all the numbers, unemployment at the aggregate level, 3 to 4% roughly is where it stays. Maybe a little bit above 4 or so at the most. Currently, it's at 3.1%. But that is conventionally where the unemployment numbers have stayed in India. Now, the problem, as I have always maintained, is the low productivity. So everybody, at low level of income, everybody has to do something to earn their living, and they are doing that. That's what PLFS data are telling you. But we still have a long way to go in terms of eliminating underemployment and therefore raising the productivity. Now, when you look at, for example, output per worker in agriculture or output per worker in our micro and small enterprises, it tends to be quite small, quite low. And a lot of our output actually is concentrated in the corporate sector. So there you get, the corporate sector output per worker to be incredibly high because all the capital as well as skilled labor are concentrated in the corporate sector. And this is where I think, some rebalancing has to happen such that the productivity where most workers are, remember there's 45% of the workforce is in agriculture, another 45% roughly is in micro and small enterprises that are less than 20 workers. And that is where your output per worker is low. And that's where we need to work. And that is a more kind of long-term project and an ongoing project. And that is where, all the kinds of reforms that I have often advocated need to be continued. I think we have made good progress on those reforms, but that process has to continue. I can understand right now, we are into election mode and not very much can happen. But, I think that is the agenda that the government will have to take up once it comes back to office.
Okay, so you are among the many who are convinced that we will have policy continuity? You are among the many, sir, who are convinced that we will have policy continuity. Can you hear me, Mr. Panagariya? All right. So I think he's lost my audio. We're going to take a very short break and try and reconnect with Arvind Panagariya. The juiciest bits of the interview coming up right after this. Stay tuned. Welcome back. We're in conversation in the first interview Arvind Panagariya is giving after he's taken position as the chairperson of the 16th Finance Commission back in Delhi, but still with that very sharp view of the Indian economy. Before the break, sir, you were talking about what the tasks are in terms of reforms for the government when they come back. So are you among the many who have now penciled in policy continuity post the 4th of June? Or is that something that now you can't really say?
No, you see, look, I'm speaking in my capacity as the economist. So
all right.
What I would say is that I think there is unfinished agenda of reforms which the new government will need to take up again. The obvious one that is there is the implementation of the 4 labor codes that had been passed in 2019, but for reasons that the states have not written, still not all states have written their rules and regulations. And these 4 codes need to be implemented in all states simultaneously. They have not been yet implemented. So that's something, a lot of progress has happened. Most of the states, I think, leaving aside probably 2 or 3, have done the rules and regulations. So that's one big reform really waiting to be implemented. And that's something which I hope the government, once it comes in, is able to implement right away. Then we have the privatization program, which is also part of the policy of the government, certainly the present government, privatization of public sector enterprises as well as privatization of banks. Now, on the former, the PSEs, the government already has a policy in place, where it makes a distinction between strategic sectors and non-strategic sectors. And a large number of enterprises in non-strategic sectors can easily be, under the policy, privatized. And so that's another area of action that is part of the policy, part of the program currently. And then we get into tougher areas which really are largely in the domain of the states. One very important one is the land. Land in the Indian cities, and particularly I'm talking urban land. Urban land in India has tended to be extremely expensive, and that obviously undermines particularly manufacturing, because manufacturing is what requires a lot more space. So a lot of kind of land-related reforms have to happen. And then agriculture, which again, the central government had tried the farm laws, and now certainly the central government cannot do it. Yeah. State governments will have to take lead in those. So these are some of the major areas that the government will have to take up once it comes back.
You spoke about states having to take forward the questions of land reforms and even labor codes to actually implement it. And now that your focus is a lot on states and state finances, this is something that you will be seeing even more closely. I want to understand the picture in terms of health of state economies. We always talk about GDP in the context of the central government, or fiscal deficit, frankly, in the context of central government. Everyone's very excited that we've been tight with our fiscal deficit targets. But as far as state finances are concerned, doesn't that continue to be a question of worry?
Sorry, a question of?
A question
worry.
Of concern, yes.
Well, I think, right, of concern, yes. Look, as we are coming, as still the process of coming out of COVID ongoing, we know that during COVID particularly, the deficits had gone up, both in the states and at the center. Particularly for that year, 2021, we all know that there was a major spike in deficits, and it had largely to do with the revenues, not enough revenues coming in. We were broadly, I think, pretty prudent in terms of expenditures, but because not enough revenues came in, there was a big spike, and that, of course, translated into accumulation of a larger amount of debt. So this is an issue which also falls to some degree in the domain of the Finance Commission. We will be looking at this. At this point, this is all I can say really. A year from now, perhaps I'll be in a better position to say. But right now, for us, it's a subject of study, and then see, if we can assist in any way, both the state governments and the central government.
No, fair enough. Fair enough. Since we're talking about what the next government is expected to do, we are in election season. I have to ask your view about the whole electoral bonds business. The Supreme Court has, of course, now ensured that it's no longer a function. Corporate India is wondering what comes out when on Thursday we will know those unique numbers. There's a debate on right now whether this will bring back black money, whether it was fair that voters don't know who's donating to whom. I was keen to know your take.
Well, this is going back to the days when these bonds were introduced, and Mr. Arun Jaitley was the finance minister. And I generally found his argument reasonably persuasive that, look, on what previously existed, and we are back to that state now after the bonds have been withdrawn, meaning, further issuance of the bonds has been withdrawn. Bonds, therefore, to some degree was an improvement as far as I can see. Mr. Jaitley's arguments seem to make sense to me that, look, absent the bonds, we go back to the cash. And the bonds were an attempt to solve that problem, that at least, This would persuade, this would encourage the corporations to report what they are donating. So to that extent, even though that is only half transparent, the bonds would reduce the role of black money. This will all be, any money that comes through the bonds is money that is accounted for. It appears on the accounts of the corporations who are making the donations, whereas, absent these bonds, when donations are made on cash, they are not on their accounts. They're not on anybody's accounts. So in this sense, I think it was an improvement, and we will therefore end up back to where we were before these bonds were introduced. Now, can this lead to a situation in which we get transparency on both sides, so that you know who donated to whom and how much? That will of course be ideal. But I think that still looks to me like for the time being, it's a bit of a distant possibility.
And we'll wait and see what comes out of that data. So I must ask you on your take on interest rate cycles around the world. And let's start with what's happening in India. You have better than expected GDP growth quarterly. Inflation really not yet where the RBI would have comfort, and a lot of, it's all up there. Will the RBI start cutting rates before the Fed, after the Fed, June, July? When will you see that happening? I just wanted you to weigh in on whether India should now follow her own path. Should we sync this with what the Federal Reserve is likely to do? And that also is a lack of clarity. And how concerning are our inflation figures?
So first, inflation, I'm quite okay. We are currently 5.1% if I go by the monthly figures in January and February. I've never been an inflation hawk in the sense of, taking it down to 2% or 2.5%, 3%. If we get there without pain and with rising incomes and rising employment, that's all good. But certainly 5% is very much within my tolerance, my personal tolerance limit on inflation. I in fact think that that kind of inflation generally is helpful, because in a growing economy, an economy that's growing in real terms 7 to 8%, you need to give some space to the prices to adjust, meaning the relative prices to adjust. If inflation is extremely low, given the fact that very few prices have the tendency, except the agricultural prices, but that other than that, most other prices don't actually fall. And so therefore, the adjustment in the relative prices usually takes place through rising prices. So some room for the relative prices, which are ultimately the signals to the investors that where should the investment go. There actually is a signal that the relative prices pass on to the entrepreneurs. It works well if you got some rise in prices of 4 to 5%. So currently we are 5%. I'm okay with that. On the interest rate question, really, I would really leave it to our central bank. Reserve Bank of India has really navigated this extremely well. I'm generally happy with how they have done it. And so I'd rather not second guess them.
Okay. Would you be okay second guessing what Mr. Powell has to do or what he should do? We're all waiting for the March policy outcome, the March FOMC meeting outcome. It's not going to happen in March, but when is the question? Do you think that concern or how careful the Fed is being is keeping the world on tenterhooks?
Well, what the U.S. does or what the Fed does impact the entire world economy. So certainly all of us are waiting for what the Fed will do. But, on the other hand, there is not a big mystery on Fed's actions, because Fed has the policy of generally, pre-announcing, and Mr. Powell has already said that, he sees the interest rates coming down in the near future. Now, if we are talking about, which month is it? That I have no idea. On that, this is all like the astrological predictions.
So you have no number penciled in. You have no month penciled in of later in the year, summer, or when we can expect that.
It will be within this year. Whether it will be in the first half of the year, second half, that I won't try to guess.
Yeah. Astonishing moves today from the Bank of Japan. A month earlier than expected. Then they've exited their negative interest rate regime completely. Just want to get your take on how impactful that is from an Indian perspective.
We are not hugely impacted by what happens in Japan actually right now. Our trade with Japan is very, very small. Investments are also relatively small. So I don't think, one or the other way we get impacted that badly. But in the overall scheme of things, Japan is a major economy. Currently, it has slipped from third largest to fourth largest. But that still means that it is one of the 5 largest economies currently. So insofar as any kind of recovery or signs of recovery are shown by Japan is a useful information, but not a major piece of information from the Indian economy's viewpoint.
Last take from you, sir, before we let you go, and of course, thank you for this exclusive interview, is what are the big changes you see post-July or post-June when you have elections, and then in July, the first budget that the new government will present after us? Because we're lagging on indicators like FDI inflows, a lot of FPI, investments also sitting on the sidelines. Do you see these aspects turning tide in the second half of the year from the Indian perspective?
Yes, I think, Tamanna, that should turn around. We didn't talk about FDI, but FDI has been tepid in the first 6 months of the current fiscal year. And part of it, of course, is explained by the fact that FDI flows have themselves slowed down because of the rise that happened in the interest rates around then. We are talking about the first 6 months of the current fiscal year. But this needs to turn around. And it's very probable that even though, the general mood is that the Prime Minister is coming back, investors may still want to see it happen. And so perhaps we will see that turnaround. Election is not very far away now. 4th of June, we will all know what the outcome is. And that, I think, should clear up any doubts or uncertainties that are in the investors' minds. We would also know, actually, Prime Minister, one hears, I remember that as the chair of the Finance Commission, I'm not a part of the government. This is a constitutional body which is independent and neutral. So I do not know. But, from what I see in the press, there's going to be big actions happening in the first 100 days of the Prime Minister. And that would certainly, for the investors, clear a lot of the uncertainty that they may feel exists.
Okay, so rock and roll post June and July, if market expectations are on track. Thank you so much, Arvind Panagariya, for speaking with us. You were listening to the chair of the 16th Finance Commission, first and exclusively on NDTV Profit. Pleasure, as always, to speak with you.
My pleasure, too.
All right, we'll take a very short break, but we'll be right back. Stay tuned to NDTV Profit.